Trade the second signal. What does that mean? I'll talk about it, plus my regular weekly market analysis and the trade of the week on HEXO. This is the Stock Scores Market Minutes. Trade the second signal. What does that mean? Well, I like to buy action candle breaks from predictive chart patterns. If you've been watching these videos, you're probably well aware of that. What happens sometimes, however, is that we may miss the first signal, but we can still take advantage of the trade if the trade is working. And so what I like to do is if the stock moves up and then pulls back and then makes a second signal, a break of the pullback, I will enter on that break of the pullback. Or alternatively, I may just add to my first position so that I've got more money at work in that trade. Waiting for this pullback and entering on the break of the pullback is really a lower risk way to get into a strong stock. Now your profits will be lower because you're getting in at a higher price, but this can be offset by the fact that you probably have a higher probability of success. Now you can do this with day trading or position trading. Let's take a look at a day trade from this Friday. The original entry signal was there, stock went up nicely, and then it pulled back for about 10 minutes. And then right here, it made the break of a pullback and ultimately had a nice run higher. Well, this break of the pullback was probably a higher probability setup, although it was at a little bit higher price than the original entry. And again, you can do that for a longer term trade as well. Here is VFF, that was the original entry point. It went up nicely, it pulled back for 3 days, and then broke the pullback, and that's when it really started its really parabolic run to the upside. And so, either you wait for that pullback and buy on the break of the pullback so that you're getting a higher probability trade, or you add to your existing position to double the size of that position and take more advantage of the fact that the stock is strong. All right, well, let's get into this week's market analysis. And the US markets continue to drift higher. Volumes are very light, and it's not a lot of enthusiasm, but there's just not a lot of sellers out there. And so the market drifts higher because there's always some buyers. And so this week we were sideways through the middle of the week. On Monday we were strong. And then at the end of the day on Friday we had some strength, and that breaks the market to new local highs, and we're just under long-term resistance. So the key thing you want to watch for in the short term is, does this upward trend line get broken? If it does, be a little bit concerned about a pullback. But let's take a look at the longer term trend. You can see that we're really in this nice long-term upward trend on the weekly. We're coming into resistance at the all-time highs, very, very close to that. I expect we'll hit that next week and move through it. The question is, will we hold it? Oftentimes markets will rally into resistance, break out, and then pull back. And if that happens, we may be due for a little bit of a pullback. What you want to watch for is on this weekly chart, do we break the upward trend line? So going back to here, we broke the upward trend line there. I don't know that it's going to happen next week, but in the next few weeks, that may be something that comes up, in which case we'll get defensive. For now, stick with the trend. The buyers are in control. No reason to be a seller just yet. Looking at the Russell 2000, which has been underperforming the market, we are still underneath resistance. Never draw that right. There we go. And we have rising bottoms, so there's optimism. I want to see the breakout through that resistance. If so, then the small caps will probably play catch up and move back to their all-time highs from the August highs. On to the Canadian markets. TSX, a little bit of weakness at the end of the week. You can see that little upward move was broken, and that's probably going to start a sideways move. However, if we make a falling top and then break down through this support zone, I want you to be pretty cautious and take some profits on some of those strong stocks that you may be holding from the Canadian market. Looking at the longer term chart, again, this thing has just been going up so nicely. It broke out. It really is due for a pullback. We just don't have a strong signal of one yet. But again, keep an eye on that short term chart, because I do think that the Canadian market could pull back a little bit. Doesn't mean that the upward trend will be over. It's just a little bit of profit taking. And when we look at the oil chart, we'll see maybe a reason why. TSX Venture, really underperforming. The cannabis sector has been a bit soft, and mining has been soft. And so we've broken that cycle of rising bottoms. We're now into a rectangle sideways pattern. If we break down through this support level, I think we're going to go lower. Next support is at 590 on the TSX Venture Index. On to currencies, US dollar continues to be strong. I think it's headed up toward its highs there. Nice cycle of rising bottoms, broke out through that resistance, and so it looks like the US dollar continues to move in that upward trend. I remain bullish on the US dollar. Canadian dollar, well, can't say the same thing there. It remains in its downward trend. No bullishness here. Even though oil has been pretty strong, the Canadian dollar can't seem to find a footing, and it looks to me like we may test those lows. Will it break the downward trend? Right now there is no sign of that happening, but if we do, if we finally break the downward trend, perhaps from a rising bottom, that would be a positive. But those are all what ifs right now, something to watch for, but not something to trade until it happens. On to interest rates. Interest rates had been moving up the last few weeks, but this week you can see the bond market went up. That means interest rates took a little tick lower, and this is a break of what's called a flag pattern. And that flag pattern break is an indication that the bond market wants to go higher near term, and that should mean interest rates going lower. Bond market's going to run into resistance right about there, so there's not a lot of upside, but something to keep an eye on. On to commodities. There's the gold price. This is the weekly chart. We managed to close above our open on the weekly. I think gold got a little bit oversold and is making a bit of an oversold bounce, but I don't like it yet. The weekly chart still looks weak to me, and I would be pretty cautious with gold stocks for now. Now, oil has had a great run so far in 2019, but this week, at the end of the week, we saw a little bit of profit taking, and it's taken oil back to its upward trend line. I always talk about how markets run away from their upward trend line and then they pull back. We can see it here, we can see it there. Happens over and over again. I think as of this point, that's all we're getting is a pullback to the trend line. But if we bounce off the trend line, make a falling top, and then break down through the trend line, I would be concerned. Fear. Well, fear's at a low point. Really no sign of fear. That's complacency, which is always a recipe for potential disaster, because if we get a trend line break on the market, we could have a real rush to the exit door. I think a lot of people are nervous, but you don't see anyone buying insurance in the S&P futures yet, which is why this ETN is not moving higher. So my ratings then, I'm still neutral on US stocks simply because I'm concerned that they're going to get stuck at long-term resistance, but bullish short-term, the trend is up. Bullish on both time frames for the Canadian market, but cautiously so. I think we're due for a pullback there. Bearish on both time frames for gold, bullish on both time frames for oil, but there is some signs that gold may make a little bounce back and oil may see some more profit taking. US stocks are likely to hit resistance next week. We're pretty much there now. And so will the general market follow the NASDAQ and break to new highs? I think probably so, but we should watch for a break of the upward trend line as a signal to be cautious. Don't take your eyes off the market. It's at a risky point. The TSX continues to be strong, but is due for some profit taking. Oil showing some minor weakness. Trend line hasn't been broken yet, so don't worry just yet, but keep a close eye on it. Gold is trying to stabilize, but has work to do, and really there is no fear in the market. All right, let's do a market scan on stock scores. I want to run the let's run the Abnormal Breaks Canada scan. Let's see if this generates anything for us. We've got 8 candidates here. I'll go through these charts and see if there's anything that I like. So first up, this is an interesting chart, CRH Medical, and you can see that it's breaking that downward trend line, and it's been building some optimism. It may pull back before it goes higher simply because it's gone up for 4 or 5 weeks already into this break of the trend line. I would like it on a confirming signal. So if it's broken out here and it pulls back for a little bit and then starts to go up again, just what we talked about in this week's topic, that would be a good entry idea on CRH. Moving along, MAG, this is a silver stock, and this is a interesting play because it had its upward trend line there, and look at how it ran away from the trend line. I talked about it already, pulled back to the trend line, and is now bouncing, and that's a pretty good signal that it should continue the upward trend. I suspect, however, that it will get stuck at 15.50, and so the risk reward of the trade isn't great. It's better if the stock can pull back and then start to go up, because that'll put you closer to support and give more upside to resistance so that you have a better reward for risk ratio. These are all things I teach in the Stock Scores education. Take a look at the Learn to Trade area of stockscores.com to learn more about that. Sierra Wireless, breaking from this sideways range here, A little bit of price action. Volume not very supportive, that's a negative. And when we think about the downward trend line, we're just tickling through it. So it has some potential to maybe move up to 20, fill that gap. Not a tremendous amount of upside, but if you're a savvy swing trader, you might be able to take advantage of something there. Don't really like ARE. Caught coming into resistance, don't like that. Let's take a look at Cineplex. It also had a little bit of price action on Friday. Volume, not great, not very supportive, but it is trying to break out of this little negative pattern. Maybe it gets back to 28. Has a pretty good yield, 7.1%. I don't know if that's reasonable to expect that it will continue. That's a pretty high yield. But if it does, you're getting paid a nice return, and maybe you go from $25 to $28. That's a 10% gain. So as a potential yield play, I would want to check into whether the yield is predicted to be that high, because the numbers we show here are based on historical numbers, not on future expectations that the company may disclose. So make sure you check the news on that. And I think that's going to be about it for this week's stocks to watch. All right, let's move on to the trade of the week. And this was on HEXO, trade that came up Friday. There's our action candle indication to enter the trade. For $100 of risk, that required 1,660 shares, which was $12,151 of capital. But remember, with day trades, we can margin 3 to 1, and so that really requires $4,050 of capital. Stock closed the day at 8 to 1 reward for risk. That means 8 times $100 is $800 in gains for a 19.7% return. A great return for a one-day hold. And this one had some opportunities to add to the position with what we talked about this week, with a scale in there and a scale in here on those breaks of pullbacks, and then a longer-term pullback right there to enter it again. So those are some of the things that you can do to increase your total profitability by adding to your winners on those second signals that come along. Well, that has been the Stock Scores Market Minutes for, April 29th, 2019. Hope that you've enjoyed it. If so, please click on the like button, leave a comment, subscribe to the channel, and most importantly, trade well.